3, 2, 1, 0.
Assalamualaikum warahmatullahi wabarakatuh to our lecturer, Dr. NURHIDAYATUL SAMBA, to our friends and to our viewers. Okay, so today we would like to present about case study 2, Besi of MAF671 integrated case study. So let us begin with first presenter. Okay, I would like to present about the first issue for this company. Okay, the first issue is about adverse audit opinion. Okay, for the audit opinion, this company have 5 audit queries, which is first queries is about going concern ability and future plan. The company are able to continue as going concern. They can make enough money to stay afloat and to avoid bankruptcy. They also can get profit from property division and also from furniture division. Okay, for the future plan, the company can try to get the financial help from foreign investor. The company also can cut costs, which is they can modernize the plan so can cut the production cost and improve company profit in the long run. Okay, for the second audit queries is about deferred tax asset. Okay, in paid tax, the overpaid tax or paid tax in advance on its balance sheet. Okay, for the overpayment is considered as an asset to the company. And in MFRS 112 is stated that the opposite of a deferred tax liability which can increase the amount of income tax owned by a company. Okay, for the loss, it is the carryover of loss. Besi incurred a loss in the financial year. So we can use that loss to lower our taxable income in the following years. Okay, the third audit queries is about PPE reported at cost basis. Okay, the Besi will record the property, plant and equipment using the cost model or revaluation model. If Besi using cost model, the asset is carried at cost less accumulated depreciation and impairment. If Besi using revaluation model, the asset is carried at a revalued amount being its fair value at the date of revaluation less subsequent depreciation and impairment, provided that fair value can be measured reliable. Okay, for the fourth audit queries is about inventory reported at cost basis. Okay, the inventory must be recorded at the level of cost or net realizable value. Cost includes the purchase cost and any other cost necessary in bring the inventory to their present location and condition. Okay, next. For the net realizable value is the estimated selling price in the ordinary cost of business less the estimated cost of completion and the estimated cost necessary to make the sale. It is according to the MFRS 102. Okay, we assume that the NRV are higher than cost. That's why Besi record at cost basis. Okay, for the fifth audit queries is about provision for the onerous contract. Okay, the onerous contract is a contract in which the unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to be received under it. Okay, the costs that relate directly to a contract consist of first, the incremental cost of fulfilling that contract. Second, an allocation of other costs that relate directly to fulfilling contract according to MFRS 127. Okay, the Besi should recognize the net obligation associated with its as an accrued liability on offsetting expense in the financial statement. This should be done as soon as the loss is anticipated. Reason for including all costs that relate directly to a contract of faithful representation, consistency with other MFRS standards, reduce complexity, and providing relevant information. Okay, that's all from me. So let's proceed into the next slide.
Now I proceed with the next issue, which is financial statement analysis. So this issue arises in the net loss in statement of profit or loss show negative figures. Besides that, Besico also did not report any profits since 2008. With this issue arise, it will affect the potential of Chinese investors hesitate to invest in Besico. Moreover, it will give bad impression to the customer and the external users. So in order for Besico to solve this problem is that Besico needs to improve their sales. The recommendation to help Besico to improve their sales is that Besico should do the customer satisfaction survey in terms of efficient and effective of product. Net Besico can change marketing efforts such as promoting in the social media, television and newspaper. Then moving on to the financial statement analysis of financial position. So this is the horizontal analysis for the asset part. As you can see, the inventory show a negative percentage of 55% since it is written down inventory in the income statement. Next, for the trade and other receivable, has the highest negative percentage of 58% due to no new orders in January 2016. The tax recoverable suffer loss since the percentage is up to thousands. As for cash and balance, it have negative 37% since it is decreases and have slow sales from 2015 until 2016. Move forward to the equity and liability part in horizontal analysis. The statement shows that share capital remained the same since there is no additional share was purchased or sold. Then the reserve have negative 21% since it has accumulated loss in 2008. Next is the loan and borrowing along with bonds and debts under non-current liability have the similar percentage, which is negative 1% since it is used to cover the business expenditure. The trade and other payable have negative 21% since it is credit purchase and it rise in raw material cost. Lastly, the loan and borrowing in current liabilities have negative 5.7% since it is used to cover the operation of the business. That's all from me. Thank you. Now I pass to the next presenter.
Okay, hi. Let's start with answer for question 2C, financial ratio analysis. Okay, the first ratio is current ratio. The formula for current ratio is current asset divided by current liability. Okay, the current ratio result amount of 0.1056, which give meaning of lower than 1, implies a negative financial performance. It is indicative of one's inability to pay off the present time monetary obligations with their asset. Okay, in 2016, for every RM1 of current debt, Besico had only 11 cents available to pay debt. No sufficient money to settle their current obligation. Okay, the second ratio is quick ratio. It's also known as asset test ratio. Formula for this ratio is current asset minus inventory divided by current liability. Okay, the calculation show result amount of 0.066, indicator of a company's short-term liquidity position and measures a company's ability to meet its short-term obligation with its most liquid asset. A number less than 1 might indicate that a company doesn't have enough liquid asset to cover its current liability. In 2016, Besico has only 7 cents of liquid asset for every ringgit of liabilities due to fewer liquid asset than liabilities. It is also because of slow sale from steel division.
Ratio is debt to equity ratio. The debt to equity ratio compares a company's total liabilities to its shareholder equity and can be used to evaluate how much leverage a company is using. We calculate debt to equity ratio by dividing total liabilities with shareholders' equity. The debt to equity ratio for Besico is 2.74. Ratio that is more than 1 indicates that the company used more debt in financing their operation than the equity. Besico uses RM2.74 for every 1 ringgit debt. A high debt to equity ratio is associated with a higher risk for the business, as it indicates that the company is using debt for fueling its growth. It also indicates to lower solvency of the business, as the shareholder equity are unable to cover the debt. Next, let's move to the cash ratio. The cash ratio is a measurement of a company's liquidity, specifically the ratio of a company's total cash and cash equivalents to its current liabilities. The formula to calculate this ratio is cash and cash equivalent divided by current liabilities. As we can see, the cash ratio for Besico is 0.023. Ratio that is less than 1 means that Besico cash is insufficient to pay their short-term liabilities. The creditor of the company will assume more risk while extending the credit terms. In this case, they will rely on the previous track record of the company. Lowest possible cash levels with no delays in creditors' payment will make the management happy, as they see the savings in terms of interest costs on idle cash and effective cash management. The last ratio is debt ratio. Debt ratio is a financial ratio that indicates the percentage of a company asset that are provided via debt. Debt ratio is calculated by dividing long-term debt with net assets. As we can see, Besico has the debt ratio of 0.17. Lower debt ratio usually implies a more stable business with the potential of longevity, because a company with lower ratio also has a lower overall debt.
The third issue is retrenchment and layoff of workers. The reason of this retrenchment because Besico is planning to close Giant Steel Berhad. However, they give a short notice to the workers. The sudden notice of shutting down Giant Steel has made the workers to protest against the retrenchment and at the entrance of the Besico. These have given a bad impression to the outsiders. Thus, there are a few recommendations that Besico can use as a guideline. Retrenchment or dismissal of workers must be lawful and fair. To determine a dismissal of employee is fair, they, as the employer, must be able to show that the dismissal was 1. Procedurally and 2. Substantively fair. Basically, there are 3 acceptable reasons for lawful and fair dismissal. That is, first, misconduct, second, poor work performance, and third, redundancy or retrenchment. Therefore, Besico and Giant Steel should retrench the workers fairly with proper guidelines of Employee Act in order to avoid legal action taken by the workers that can put the company in a danger position. Besico and Giant Steel must be able to show that there was a just cause to terminate the employee. They also must show that they had implemented a practical dismissal procedure of inquiry before decided to dismiss the employee. Giant Steel also should retire workers who are above retirement age. So next is earlier notice of retrenchment and give reason of dismissal. So this notice period is based on the employment contract that falls within the Employment Act. Employer also required to submit the written notification to Department of Labour at least 30 days before conducting a retrenchment. Therefore, Besico should issue a notice to the workers at least 30 days before shutting down the Giant Steel. Next is compensation upon retrenchment. So this compensation is for employer that falls within the scope of Employment Act. The calculation of compensation is based on employment service. However, if the employer is not covered by the Employment Act, it will be based on the employment contract. However, if the contract is silent, it is up to the employer to pay the compensation or not. So for Besico, in order to take care of the welfare of the employee, it is advisable for Besico to compensate the employee that are affected by this retrenchment. The next is allocate potential workers to the subsidiary companies. So since Besico have 5 other subsidiaries under steel division, so Besico can allocate potential workers to the subsidiaries. It would be such a loss to the company if they do not keep the potential workers in the group. So last recommendation is recommend the workers to the other companies. So allocating all workers to the subsidiary might be impossible. So therefore Besico should recommend the workers to the other companies that is in the same industry. So by making sure a fair and proper process of dismissal helps the company to reduce legal costs and may reduce employee turnover.
Okay, next we move to the question 4. Yes, we are agreed that the restructuring plan should be proposed to Board of Directors and Managing Director of Besico. The reason why Besico need to make restructuring plan is because it was classified as PN17 status on 25th October 2013. Therefore, Besico need to restructure and revive the company in order to maintain the listing status. Other than that, Besico cannot convince the Chinese investor to revive Besico as they are searching funding to save Besico. Without regularization plan, Besico cannot make an appeal to Bursa Malaysia. The Chinese investor also does not want to make an investment if Besico's financial performance is not stable and is not making any profit. However, there are some criteria on how to prepare the regularization plan. Firstly, the regularization plan is sufficiently comprehensive and capable of resolving all problems, financial and other matters that made Besico to fall under PN17. Next, Besico need to regularize its financial condition and level of operations. After that, the regularization plan is fair and reasonable to Besico itself and its shareholders. At the same time, it also should increase shareholder value. Therefore, we have come out a few recommendations for Besico. Firstly, Besico need to focus on customers' demands besides improving its product's quality. As the quality of the product inconsistent and unable to fulfill the domestic market demands, Besico can improve the quality of the product by leasing new high-tech equipment and supervise the production process to ensure employee productivity and all operations flow smoothly. Another recommendation is that Giant Steel need to be liquidated. Since Giant Steel did not make any profit and the production is suspended, it is highly recommended to close Giant Steel to minimize operating costs and reduce debt of Besico. If Besico agreed to liquidate Giant Steel, the funds from liquidation can be used to relocate for other segments, such as property and furniture division. Besico can increase the contributions for other divisions since there will be no steel division. Besico also can diversify the products. As an example, expand the products from furniture division. Besico can use another type of materials to produce new furniture products such as copper and aluminium instead of using steel. This new strategy might be a factor in increasing sales of Besico and profits to the company. Thank you.